Bitcoin gets down to this kind of 20% level, every time it's got here over the last, well, since Bitcoin started, it's basically done something between a 70 and 200% rally. And Solana's version of that is volatility down at 50%. Every time it gets there, it has a huge rally. So it feels like it's so close.
Yeah.
It bounced, Solana bounced off that lovely wedge pattern, came off the bottom. Today's a bit weak in Solana, no real reason. And it just feels like the next move is, the ripening of the bananas.
Real Vision CEO Raoul Pal anticipates massive rallies for Bitcoin and Solana in the current cycle, driven by compelling market dynamics. In a recent podcast, Pal shares his bullish outlook, drawing from historical performance trends of both cryptocurrencies. He identifies a recurring pattern in Bitcoin's market behavior, noting that whenever Bitcoin's volatility drops to approximately 20%, it historically precedes significant price rallies ranging from 70% to 200%. This observation suggests a pattern where periods of low volatility often precede strong upward movements in Bitcoin's price. Pal also identifies a similar pattern in Solana's market behavior. He highlights that Solana typically experiences a decrease in volatility to around 50%, followed by substantial price rallies. Recently, Solana demonstrated a bounce off a wedge pattern in technical analysis, indicating a potential reversal or continuation of its upward trend. This technical signal further supports Pal's optimistic view on Solana's future performance. Pal's analysis underscores the importance of understanding market cycles and technical indicators in predicting cryptocurrency movements. His insights provide a strategic perspective for investors navigating the volatile crypto landscape, suggesting potential opportunities based on historical patterns and technical signals.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
I think we finished the consolidation period. It's very typical around the halving time, the election cycle. It usually does this and usually finishes in July, maybe August. We also, don't forget, if you look at Fed net liquidity, it collapses into the end of every quarter. So that's as people the banks window dress their balance sheets. So we saw Fed net liquidity come off very sharply. Today should be the last day, and then it gets rebuilt again. So whether that affects assets as well, even though it's quite well flagged in advance, possible. But overall, I think the price structure of what everything looks like, it looks like we hit the base. Solana, I'm looking at the chart. Solana in April, we came down to just below 120, came to 118. We then rallied up, back down, formed this wedge, perfect pattern. My guess is we just go up from here. I wrote about this in Global Macro Investor a couple of months ago. My view here is the same as Arthur's, who's also a GMI subscriber, but I think we're being set up by the BOJ for a nice spectacular bit of shenanigans. BOJ are very clever at what they do. They've been manipulating FX markets forever, and everybody loses money trying to fight them. My guess is they're sucking in the last positioning now. Chinese need money too. The Japanese banks are the Eurodollar market. They're the largest participants in the Eurodollar market now. They're short of dollars, which was the point.
Yeah.
Somewhere, the US is going to give them infinite line to be able to intervene. And that will flow back through the banks, both into treasuries and also to China, who desperately need the dollars. And the Fed don't want to give them a direct liquidity line. So if there's a source of instant shocking liquidity that can come, the most perfect setup would be the Fed cut, Japanese intervene. That would just nuke everybody. And I've seen the Japanese do this many times before, and they tend to do it with the approval of the Fed, because that way you get bang for your buck. We know that Yellen's been in China twice. So, Yellen is the world's biggest bond salesman, well, junk bond salesman. She's the Mike Milken of the era. She used to sell those bonds, and the Chinese are saying, we ain't got no dollars to buy your bonds with. It's a really simple equation. And it's like, okay, let's figure this out. How can we get you dollars so you can allow your property developers and everybody else to pay their dollar interest debts, and you can recycle it into treasuries? And I think it's via Japan. Generally speaking, the market's fixated in dollar yen's going to 200, 300. Oh my God, it's collapsing. They've lost control. Okay, so that's where the current narrative is. And people expect intervention at some point soon. They're waiting for it. it's really going to be about the size of intervention, because if they go big, it shows they've got the backing. And then you'll see it, whether it's versus the foreign central bank reverse repo or via the swap lines or whatever the mechanism is. Don't forget, a lot of the time they try and hide the mechanisms as well.
That's what I mean.
So it's really the size that they go in. If one day we come in and dolly ends down 1.5%, and then it happens again the following day, it's on.
Yeah.
And that's just a net injection of liquidity into the system in massive size from the Japanese. There's RSI divergence. It's all kind of stacking up to the BOJ actually use technical analysis. They're pretty good at doing this kind of stuff as well. So let's see. But the dollar is too tight, and it reminds me quite a lot of 98. Was it 97, 98? Everybody was long dollar yen. I mean, in gigantic size, one of the biggest trades the world had ever seen. And the Japanese intervened. Everyone's like, yeah, no big deal. And then the thing utterly collapsed. I mean, Tiger Management, all of these guys got completely carried out, apart from Paul Tudor Jones managed to get it right. The other thing we need to think about is, obviously, after last night's debate, the probability of Biden being swapped out is extremely high. So who is that going to be, and how's that going to impact our playing field here? It feels that Newsom is the one that's being positioned, but who the hell knows? Could be anything. Newsom being California, probably pro-tech in a more meaningful way. I think the Biden administration has managed to lose all of the big tech founders to Trump, which is an extraordinary. They're all Democrat voters, and they've all gone to the other side. Newsom, maybe he can pull them back. Because don't forget, it was Newsom who was organizing Xi to come and meet them in California. That's a whole other story. But there's I don't know, that's the thing we all need to think about, is what's the probability that Newsom is pro-crypto.
In other developments, prominent crypto analyst Michael Vaup predicts a bullish reversal for Bitcoin despite recent challenges. In a recent X post, Vaup suggested that Bitcoin might see further declines before potentially recovering strongly. He identifies the $60,000 level as a crucial point that could trigger a bullish divergence, marking a potential turning point in Bitcoin's price trajectory. Vaup also points to the anticipated approval of a U.S. spot Ethereum ETF by the SEC, expected next week, as a potential catalyst for Bitcoin's upward movement. The potential approval of the U.S. spot Ethereum ETF is viewed as a significant event that could bolster market sentiment. Analysts anticipate increased institutional interest and overall investor confidence in the cryptocurrency market, which could benefit both Bitcoin and Ethereum prices. This development is expected to have a positive impact on Bitcoin's price, potentially driving it higher. Addressing concerns about Bitcoin miners selling off their holdings, James Butterfill, head of research at CoinShares, dismisses fears of significant market impact. Despite miners selling over $1 billion worth of Bitcoin this year, Butterfill notes that this only represents 1% of total Bitcoin held, a relatively minor figure compared to previous years. This analysis suggests that the market impact of miner sell-offs may not be as pronounced as initially feared. As of the latest update, Bitcoin is trading at $61,565 with a slight increase, accompanied by a 12.6% decrease in trading volume over the past 24 hours.
I'm putting out a video, probably go out today, which was just showing all of the relative things that I'm looking at for this, why I think the trade is on. And the Solana Bitcoin chart is super clear. It's a beautiful stair-step consolidation. Same with the ETH one. So again, they all hit the bottom of the wedge, triangle, channel, all of the relative continuation patterns, goes higher. And if it does, then we got another big outperformance to come from Solana. So I just think, if the space is going to get liquidity, the further out the risk curve gets more. Solana's got all the narrative and a real huge amount of traction, and we still haven't got Fire Dancer out yet. So there's a lot here. I think it's very difficult to beat Solana this cycle. Just super difficult. Even if ETH manages to find a massive use case, it's suddenly, YouTube is being tokenized on Ethereum. It's still going to be very difficult to beat the narrative and the momentum that's currently behind Solana. Global liquidity has been flat. That tells us no new liquidity. The business cycle hasn't really turned positive. That tells you earnings aren't being reinvested, or people aren't making money. So you're kind of stuck in this this no man's land for now, and the next one will be the ETH ETF. So that'll be new money into crypto land, and then we can all play with that money for a bit. It's basically how it is. We need to think of it as this is a crypto land economy, and for crypto land economy to grow, we need foreign direct investment or even hot money flows. Either way, we need fresh capital in. The liquidity cycle finishes around the summer, i.e. peaks. But many times, usually the crypto market doesn't peak until the end of the year. So could it peak earlier? I don't know, and I don't want to play for that. One thing just about the rate cuts is we don't need rate cuts for this. It's liquidity that drives it. Right. Rate cuts are actually a delay on the liquidity that happened ages ago. So if we go back to 1994-5, we had the big hike in rates. The bond market freaked out. Everyone thought we were going to go into recession. We didn't have a recession. The Fed cut in 95, 25 basis points, then a 50. Rates were still miles higher than the low from 1993. And the Fed was on hold until 1998, until the Asian crisis. That was the strongest period of outperformance in market history. So I just like stability is fine, as long as there's liquidity. All of our forward-looking stuff just says the business cycle improves from here. And so there's a bit of chopping around, a bit of noise. Everything says it improves, which is kind of what we should expect into macro summer. We don't need it to go lower. We don't need to do anything. It's been below 50 for a long time now, one of the longest periods ever, much like the yield curve has been inverted. So no, I think it gets stronger, and that's a good thing. It brings earnings back into the economy. Those earnings get recycled into crypto. When people are feeling more secure in their jobs and all of that, and they're earning a bit more, or their local businesses earning more, money gets recycled. So, I'm just positive on that.
Pal points out that all leading indicators are pointing towards an upcoming improvement in the business cycle. Despite some fluctuations and noise in the data, the overall trend is expected to be positive moving forward. This improvement is anticipated to coincide with what Pal refers to as a macro summer, a period characterized by favorable economic conditions. This suggests that instead of further decline, the economy is poised to begin its recovery phase. Moreover, as earnings increase and individuals feel more secure in their employment or business ventures, the additional income is likely to be reinvested, including in cryptocurrencies. Pal asserts that during times of economic prosperity, people tend to have more disposable income and are thus more inclined to allocate funds towards assets such as crypto. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.